Victoria. Good morning, afternoon, and evening to all, and welcome to the European Blockchain Convention 2021. We've had a great start to the day, and it's just about to get a whole lot better with the lineup we have in store for you all now. I'll be your moderator for this session. My name is Shiraz Ahmed, and I wear two hats, one being the Head of Business Development of the Crypto Valley Association, a nonprofit organization that supports the ever-growing blockchain-based community worldwide, and the other being the Managing Partner of Storm Partners, an all-in-one solution provider to this ecosystem full of challenges. Gathered here today are representatives of bodies that were established to protect the people and support through means of nonprofit the communities they govern. During this panel, we're going to be talking about how to create equitable access to the global financial system. First, we'll start with a round of introductions, then get straight into the heart of this interesting topic, and after proceed with a Q&A to all of you listening. So don't hesitate to ask your questions in the chat bar below. All right, so ladies first, Daniela Dixon, CEO of the Stella Development Foundation. Would you like to kick us off with a little introduction about who you are and maybe a little bit about the foundation as well?
That's great. Thank you so much. I love what you say that we're here for the people. So my name is Danielle Dixon. I'm the CEO and Executive Director of the Stellar Development Foundation. Stellar, the SDF is a nonprofit, non-stock entity that's focused solely on the mission that is very aligned with this topic, which is creating equitable access to the global financial system. We do that through the development and shepherding the code base for what's called the Stellar Network. Stellar is an open, decentralized, permissionless network that is already creating equitable access by having all these really wonderful and fascinating, innovative companies building on top of it. And being able to focus on the regions in which they live in to create this, to enhance the existing rails of the global financial system and to make it so that it's a lot smoother and borderless. Thank you. Look forward to this.
Thank you, Daniele. Great, and so next up, Mai Santa Maria, the Head of Financial Advisory Team of the Republic of Ireland. Would you like to present yourself?
Thank you so much, Shiraz. And thanks to Victoria and Danielle to have me again at the EBC. It's nice to actually be back participating in a panel and non-moderating. So you're doing well, Shiraz. For those maybe who've probably seen me or heard me already talk at the EBC, I am a recovering banker. I stole that line from Julian. I spent over 20 years in the private sector, but I've seconded to the Department of Finance. I've been working with the Finance Minister in Dublin, in Ireland, for the last almost 4 years now. Why am I even sitting in this panel discussion here? I guess it's because of the work and the initiative that we've been part of over the last year. So the Minister was invited to be part of the World Economic Forum, the WEF Digital Currency Governance Consortium, and as part of that consortium, we've been looking at the utilizations and application of stablecoins to cross-border aid. So I think this has been quite aligned to the work that both the DM Foundation and Stella Organization have been doing, and I'm really looking forward to discuss this with them, because certainly it's opened up my eyes to a lot of things over the last year. Thanks, Shiraz.
Thank you. And last but not least, Jean Lecoq, the Director of Policy of the DM Association. You're up.
Thank you, Shiraz, and it's an honor and a privilege to be with Mai and Danelle and for the invite. I'm joining you today from Washington, D.C., where prior to the past 20 months rocket ship ride with the Libra/DM project, I spent a decade at the Federal Deposit Insurance Corporation, regulating more than 5,000 banks. So fairly familiar with the modern financial system and all of its challenges and opportunities that we have faced today. I guess in every aspect of our lives during this unprecedented, and it seems to be coming to a new normal COVID crisis, the role of technology for household and business and government continuity has really been core and essential. It's true in perhaps every aspect of our lives, from how the internet and communication has been a lifesaver over the past year to stay connected with friends, family, and work. The one exception, and why I'm so excited to have such experts like Mai and Danelle today, and Shiraz, you moderating, the exception I see is the way we transfer value. And so very much looking forward to our discussion today on bringing modern financial access to the more than 3 billion individuals that are either unbanked, don't have a bank account, or underbanked that leverage alternative financial services. So really excited to be here today.
Thank you, Julian, and thank you all for that short but sweet introductions. And so let's dive straight in, and maybe Daniela from the Stella Foundation, you can tell me a little bit more about how you're seeking to unblock the world's economic potential by making money more fluid, markets more open, and people more empowered. I mean, can you speak about some of the tangible actions you're taking to do so? I think you're on mute, unfortunately.
Look at that. I was trying to be respectful and I did the worst thing ever. Thanks so much for that question. It's what we are, we're really focused on really creating and building this ecosystem. The thing that we need is like the improvement of network effects, so that, you know, once you bring, we have lots of financial systems that are part of the Stellar network. These financial systems sit on the edges of the network and are the on and off ramps, and they actually issue stable coins. So they're one-to-one fiat-backed coins that are being able to be utilized not just in the region in which they sit. They can be utilized everywhere, but they can also be an off-ramp so that folks can go in and just redeem their assets for the local fiat if they need to. So these financial institutions, one of the most important things to be able to need for the network is these financial systems everywhere. We have about 20 different geographies covered now. We need more. And so there's a lot of focus and attention that we bring to just bringing these different financial institutions on in every region. They're the ones who create the innovation. They're the ones who actually focus on the regional issues, and they know how to solve those problems regionally much better than we do. But we actually provide the infrastructure and support for them to be able to do it. So what SDF is truly focused on right now is helping these corridors that have already started to grow. We have some in Nigeria and the US. We have corridors between Mexico and the US, and then Mexico and Nigeria, Argentina, Nigeria, and then also Europe. These corridors, we need to bring more volume to them so that they can actually increase the options for those that are participating there. But the really awesome thing that's happening is with this regional focus and with these entities that are building regionally and in a permissionless way on the network, they actually are able to solve these real financial issues for their local residents and their businesses, so small to medium-sized businesses as well. So that they can actually become part of this global financial structure that we all talk about, and yet it's really hard to get access to. So just from the simplest thing of transferring value from Nigeria to Europe now can be done in 3 seconds on the network, and it is done every day. So the corridor between Brazil and the US and Brazil and Nigeria opening up as well, and those are also the transfer of value in 3 seconds. It's pretty phenomenal to see, and it makes us really happy to be able to be a part of it.
Wonderful. And I'm looking forward to speaking more about some of these corridors that you mentioned a little bit later on in the conversation. But your team provides research and input to policy options. Would you be able to provide the audience maybe with some clarity towards what the Republic of Ireland's current stance on digital assets and blockchain technology is, and whether there are any initiatives being taken within Ireland to promote equitable access on a national scale?
Okay, well, those are very, very big questions. Let me one at a time. In terms of speaking to policy, unfortunately, I don't have the minister's job, so the only person who really can speak to policy would be the minister. But even though Ireland, I mean, let me maybe backtrack a little bit onto that. Why would even Ireland be looking at the digital currency governance consortium initiative? Well, particularly because it looks at a project about bringing in and organizing private and public initiatives together into a dialogue, and to actually really effectively what Daniela has actually described in terms of building that network. And that's of interest because even though Ireland is such a small country, and for those of you who have watched the TED chat, you might know that it is the #1 country in terms of aid being dispersed. So, you know, we are a nation of givers. So clearly there's an interest of, well, that money that we give, where does it go? And are we making the most out of the money? So that's certainly, there's an interest in there. And, you know, there's no doubt about it. It's just like we want to understand what we're doing. Can we do it better? And there's better ways to do it. And at the same time, really building the sustainability for not just the improving the infrastructure, which is needed cross-border, but really what can we really do in terms of innovation to maybe just eradicate the need to that transfer to happen in the first place. That's totally different, Shiraz, to your question around the policy or how Ireland as an economy might actually look at digital assets. It's not that just apples and oranges, but we, as a country, as you know, on monetary policy, that's totally linked up to the euro. There's European Union. We're participating to the market in crypto assets draft regulation proposals, as you know. They're ongoing. So we've embraced blockchain in Ireland from earlier on. The Blockchain Ireland community has been ongoing with all the community participants for years now. So there's not much I can say there, really. Like, it's not like we've taken a step back or we're not actually discussing it at all. I mean, and I think even me being here on this part of this panel is this part of this continued commitment to learn. And quite frankly, you have to continuously, because there's always something new to learn from it. So does that answer your question? I hope it does. And there's not much more I can do, because I said, in terms of policy, there's a lot that will happen. I think in the context of the wider framework of the European Union, you have fantastic speakers that will be do a much better job than I will be. I think you have Peter Kirsten, you have Jan Jensen, Jason. I think you have Peter Silgaudis as well. They're all actually, and this is the European Blockchain Convention virtual conference anyway, so I know they're speaking at that. So I think they will be able to give you a bit more bone, and I wouldn't want to be stealing their thunder on that European policy on digital assets. On what it means to us, and particularly when it comes to the equitable access to finance, I really do think it's about this, and I said I'll go back to this point of we are a nation of givers. We have embraced innovation, and it all goes back to a little bit of history as well. As you know, there's 5.5, 6 million people living in Ireland. There's over 40 Irish passports in the world. A lot of the Irish communities have survived over the years thanks to the remittances. These have been the immigrants, the Irish immigrants going to Australia and the States and so forth, and sending this money back. So we are a society that has been built thanks to that help. So I think there is an unconscious knowledge of the importance of doing that. And if there's a better way of doing and building that and not providing leakage, then we should definitely be part of building that. Absolutely.
Great, thank you, Maya. And yeah, I agree with regards to the educational side, and you definitely put a lot of meat to the bone there. So really appreciate that part. And Julian, we were discussing this the other day, saying that there are a lot of different solutions, but we need to provide a safe way to allow the consumer to do what they want to do and to allow them further optionality. I mean, how is the DM Association supporting this? Yeah.
Thank you, Shiraz. And I see you're certainly throwing fastballs to us today, so I think we appreciate it. I'm going to build on what Danelle used the term option, and then Mai spoke about public-private partnership. It's clear that if history is any indicator of large-scale type of changes, the sentiment that we're feeling today, we've seen in the past. And I think public-private partnership is a great example, such as the advent of the internet and what internet did to democratize information and communication flows. If we think back, just even recently, the transition from kind of the cash over to the ability to write checks, then from checks to the charge card, to the debit card, to the credit card, moving on to plastic that occurred 70 years ago. Payment systems today very much look like the telecoms did 30 years ago. And I think that this sentiment is starting to grow, where consumers should be able to use the means that they prefer. And so even today, access, let alone access to credit, is far from ubiquitous. It is certain that you should, as a consumer, have the option to pay a merchant with cash or with any other means that you choose. So I think what we see here is a natural progression from plastic to digital, and it's really not to disrupt the industry, but it is really to complete some of the payment cycle and lower some of the fees. Mai talked about remittances, and remittance corridors, even smart remittance corridors, are right around the 4.5% fee range. The fees has really almost been flat for the past decade, right around 9-10% About a year and a half ago, it was at 7%. The latest World Bank data from end of last year dropped it to 6.8%. But short of large-scale innovation, we won't get to the United Nations Sustainable Development Goals of dropping it to 3% in the next 9 years. So I think having this all ships rising moment, as I call it, with folks, whether it's from the Irish Central Bank or other central bank around the world, working with fintech firms, I think it's just a benefit for consumers to be able to use the type of payments that want. And certainly what I think is the most important lifeblood of the world are these remittances that, let's be honest, are used for shelter, for food, for security, for protection. A 700 billion market every year should be prioritized to lower these remittance fees for those that are in most need of them.
Thank you.
Shiraz, if I may, because I'm just trying to imagine we'll actually be on a panel discussion. It might be a bit easier, and I'd have maybe Julian to my left or right. And there's two things that he said that I think I'd really like to ping it back maybe to himself and also to Danelle as well. Is I mean, the title of today's discussion really is about these equitable access to finance. And I think it's a very important angle to it that I had not appreciated until I started being part of this initiative, which is there are elements of the global finance that are not that pretty. So maybe there is a chance to certainly allow for that access maybe to the best parts of finance. So let me explain to that. I think it would be a bit unfair maybe to allow for a better payment rails and access to finance, if it means access to credit, that's great. But if that leads to a whole new cohort of the society in the world that end up in debt or unable to pay their credit fees, that is not what we want. There is an element of, can we use that innovation maybe to actually build out the prettier sides of the global finance, and this is maybe use programmable money to allow better ways of savings, or allow microfinance KPIs of sorts to actually help female entrepreneurs to build a credit portfolio. Those are for me, and that's maybe it's a challenge, or I don't know what Julian and Danelle think about this, but having been in private sector and having seen the darkest side of the finance, this has been clearly the increase in credit, the mortgage payments, arrears, and so forth. Those areas that clearly have been created partly because of the finance system and how it works. Is there a role for blockchain, for stable coins, for what we're doing here, for what we're trying to do, to really focus on the prettier sides of that finance that can actually take us? And I mean, Julian, you've mentioned, for example, the SDGs. I can think of 3 or 4 SDGs that would probably benefit of more interaction and more work towards building out that nicer side of finance. I don't know
so
whether
much
you guys
of what
have any.
Yeah, I mean, I think the issue is so much about like the localization needs and what the region itself needs, because not every region needs access, at least not to the level that we have it in certain countries, to all of these opportunities to become more and more in debt. But for example, if you take a company that's building on Stellar called D-Stock, they are you can actually purchase stock that's on the American Stock Exchange. You can now purchase it anywhere in the world using your Sure wallet, and you can purchase a quarter of a share of anything. So now blue chip stock can be available. Those are kind of things that allow for these individuals to become more empowered and to be able to invest and to save money in different ways than they ever had an opportunity to, just from their wallet, from the wallet on the phone. None of this can actually come though without education. So I think that with the opportunity to be able to deliver these really fascinating different innovations to individuals all over the world, you have to simultaneously bring them education so that they can understand what they're getting into. And they don't need to know that it's blockchain, by the way. I'm not focusing on the blockchain technology component, focusing on that financial component so that it again empowers them and brings them the opportunity to do these things that are new to them, but bring real value and opportunity for them to save in completely different ways.
So I love, Mai, that you went with the nice side of finance and the not so nice of finance. I really care about the nice side of finance, I guess. And one of the things I saw with the DM project that I thought was really impactful for the nice side of finance, which to me is, the payment rails and things that are kind of basic, is the interoperability and the open source code. And I think the open source code and interoperability bring kind of there are two big ways that how that is going to advance the market and help the nice side of finance. One, by pulling more people into the modern financial economy, very, very similar to how the internet did for e-learning and for access to this information that individuals around the world may not have been access to in the past. And on the open source side of things, individuals over time will be able to build on the DM network. And if you take a look at traditional systems, even the nice side of finance, traditional systems, what you've seen is a replication of siloed solutions. And they typically don't talk well to one another. They don't transact well with one another. And from a consumer and a merchant perspective, that's where I think we have a lot of friction and where costs grow and grow. So I think with the DM project, the interoperability is certainly something that is meant to help the nice side of finance with digital payment rails.
Thank you, guys. Very interesting.
Thank you, Jane. And Mai, you mentioned a little bit about how potentially we speak a lot about the unbanked, but rarely do we speak about the underbanked. And Daniele touched upon it a little bit before. Would you be able to share a little bit with the audience why this group of individuals could be the most in need of the solution blockchain technology provides?
So to me, Shiraz? Yeah. I mean, I certainly I can kick off. I think maybe Julian and Danelle would be much better placed. I mean, top of my head, and I said, for me, I'm complete novice in this area. I've only been dipping my toes in the WF initiative this last year. So there is largely, I think, is 1.7 billion unbanked. But I think that's an important point. I think it's important, as you can, having access to banking facilities. But I think, as with all high-level numbers, sometimes they kind of escape the reality. Some people may not have a bank account because there's no real tangible infrastructure. If you live in one of the many thousand islands in Vanuatu, you might not actually have access to a bank account, and it's all cash, local currency. So there's probably a bit of a misnomer. What attracted me to the initiative, yes, the unbanked, I think it's important, but it's probably more the amount of funds needed to really help when it comes to humanitarian aid. So, and in terms of numbers, I remember high level, maybe it was 2018, 2019, it was definitely over $30 billion needed really to cover humanitarian needs across the world. Is a big number. And as far as I know, only half of that was actually ever met. Some of these humanitarian needs were obviously as a result of crisis. So it could potentially be that somebody did have a bank account, but because of an earthquake or a flood or whatever it was, there was no access to that. But then there were people really clearly that did not have. Maybe they were victims of misplacement due to civil wars or hunger, and they'd never had a bank account at all. So then how do you go about to actually disburse that cash and into that person in its hand? So the bulk of funds needed to actually meet those in the context, for example, of the SDGs, I thought it was large, incredibly large, and that was way before even COVID kicked off. So if anything, the pandemic has actually made the gap between the total value of money needed for humanitarian needs and what's available even larger. That doesn't mean it's unsurmountable, and that's one of the things maybe I've learned through the initiative is crypto philanthropy. So like this, just as Danelle was actually mentioning the fact that this, pretty much through the work that they're doing and this global infrastructure, that you might want to go in and invest in stocks all over the world. With blockchain, you open up the potential to people also, if they want, directly donate to any organization or anywhere else or any cause quickly all over the world. And it's not a dream, like maybe you read it, Shiraz, and maybe Julian knows better than me. I think a couple of weeks ago there was an article saying that it was a quick survey. 65% of people who were deemed to receive one of those 8 financial help checks in the US were going to or willing to invest that in crypto, whether it be Bitcoin or otherwise. I mean, this is a huge percentage, right? Now, if 65% of these people who are going to take their $1,500 check knew and were willing and understood really what they could do with that, if they're willing to take 65% and directly put it in crypto, they could easily just put 10 or 15% directly to, help cover that gap. And the same goes, I think, with SDGs, not obviously not just humanitarian aid. So I suppose maybe I said with my really novice, and I'm certainly not the expert, and I'm going to leave it now to Julian and Danelle to fill in my poor understanding is the gap is high, it's big, sorry. But what I've seen working with initiatives with the WF is that gap can be filled in and can be closed, not just by improving the process of making the transactions faster and more cost effective, but also by actually allowing, say, donors to provide funds and also to get recipients to actually get them in a simpler way. So.
And I think that is the one side of it from the humanitarian side of it. And then if you think about it from the unbanked or underbanked component of it, where they actually just don't have access to banks in the village that they live in or in the city that they live in, and they have to, even money, when money's transferred, it's driven from place to place versus in the ways that we're used to it here for me in California. There's so many of these companies, and this is why I keep focusing on the local piece of it. For example, in sub-Saharan Africa, it's the highest globally to send money. And yet many Africans that live away from home still do that money transfer. But there's a company called Uhuru Wallet that is in South Africa, but they have markets in Ghana, Nigeria, and Kenya. They've built on Stellar to be able to offer these wallets to migrant workers so that those workers who are normally excluded from the financial system because they can't get access to bank accounts. Maybe they just don't have them in their area, or they actually can't because they don't have the credit means to be able to demonstrate that. They can have now a wallet on their phone that they can actually receive these transfers quickly, but mostly they can receive them safely and hold them in digital assets so that they don't have to worry about having them in their home, carrying them around with them. They're on their digital assets on their phone. So these are the kinds of things, like it's really hard for us to sit where we sit and to know what people need in every geography. The notion of open source, the notion of interoperability, the notion of allowing these innovations to happen locally really changes this dynamic so that we can get to the unbanked in very different ways than we could historically.
Oh, no. Very, very
I'll add just one more thing, Shiraz, because I think Danelle and Mai really covered well on the unbanked, underbanked. The opportunity here is the unbanked and underbanked have smartphones and they find ways to get connected to the internet. And if you take a look, the best use case that I think a lot of times we think in, we could, very lofty aspirational type goals for the unbanked, underbanked. But if we look at Kenya and M-Pesa and what they've managed to do in a decade, it's staggering, especially women's access to financial services, which are typically disappropriate to men. They've really been able to cut from 85% of unbanked, underbanked down to about 10, 15% almost overnight with M-Pesa. And so this is really where innovation plays a big role in being able to really democratize access to financial services. And short of large scale innovation, we're not going to get there, which is why these discussions are so important and why we finally have a technology in blockchain. To me, blockchain starts with a B because it's also banking, right? The blockchain technology, I promise you in about 3-4 years, we're not going to talk about the technology itself, which is super complex, which is now in its third or fourth version since Bitcoin and Satoshi Nakamoto came out with it a little over a decade ago. Very similar to the way we're having this phone call today. Is anybody right now thinking about the little packets that get broken down into bits that go into a DSL line, that go into a T1 line, that go under the Atlantic in one of those fiber cables? we don't think about it. We just expect it to work. And so I really believe blockchain is going to fade in the background, and we'll have concrete discussions about the real business cases to drive down the unbanked and underbanked, which between friends, it's not just individuals south of the Mediterranean. In Europe, you have 2 out of 10 Europeans that either choose not to have a bank account or don't have enough money for a bank account or are scared of some of the fees. And then you have China that has the largest, about 250 million Chinese don't have a bank account. So this is not just a South of the Mediterranean challenge. This is a global challenge where technology can really help.
Thank you. That's an amazing point. And I am wary of the time as we have some questions coming in, but really I think what you mentioned being an all ships rising moment, and just all of it in general is wonderful to hear. Maybe I start off with a question from Ricardo Garcia Ruiz, who mentioned, in the context of the emergence of CBDCs, what role will cryptocurrency-based payment instruments play? Please feel free.
Yeah, so I'm not sure I exactly understand the based instruments, like how to think about that. But with CBDCs and the issuance of CBDCs, hopefully in an interoperable way, I think it'll just really empower this system that we're trying to push. I agree with Julian that I think that we're no longer, and we shouldn't actually, I don't like to do it today to talk about blockchain so much as I like to talk about the use cases, as you can probably tell, because from my standpoint, that's actually the real focus. So CBDCs are just going, I hope that there's a public to private partnership where the countries that are issuing CBDCs are working with the private institutions who have already developed a lot of these really innovative plays on how to actually get these CBDCs out into the world. Because the truth is, like, for example, the Fed here in the US, they don't have a relationship with consumers, but the private companies do, and they already do this through the existing banking infrastructure, so they can do the same here. So have the CBDCs issued, working with the private entities who can be interoperable across many chains, for example. It allows for these instruments for you to be able to make payments, to do transfers, to be able to leverage all of these cool financial instruments that are out there in the world using something that you're comfortable with, because you know that it's one-to-one backed and it's backed by a government. And so I think that this is really the next level innovation that we're seeing. And I'm hoping to see, maybe even by the end of this year, beginning of next year, that we see this actually come to fruition. And I'm just really fighting really hard with those governments to really work with the private sector so that they can leverage that really great institutional knowledge of how it works.
I was going to say, yes, I'm nodding here like a bopping, but I couldn't agree more. I mean, everybody wants this to happen and wants to happen fast. And I think once there's an agreement, clearly the right way to go about it would be to utilize the private sector rails that are currently out there, whether they're new or bad. But clearly, like the new ones that are working would be ideal to use, right? If the question is meant, and I'm just reading it there, and the stable coins of CBDC is an element of maybe thinking that even 2 to 3 years time, there's a digital dollar or a digital euro. What's the point of stable coins today? Yeah, I mean, I don't know whether maybe that's directed at DM to you, Julian. If that's the case, I would say maybe stable coins or any other, whether it be DM of others, would probably just be an in-between to that retail CBDC if that ever happens. Or maybe it's the opposite. The CBDC retail actually ends up back in being morphed in the private sector, supported global private coin that actually is up and running and working. We don't know, but I do think that we'll have to start talking about blockchain the same way that we start talking about Wi-Fi. Now we just book hotels depending on whether the access, the service is there or not, and we stop talking about it. I think that's very important. Maybe just linking up to that as well is just and I totally agree with you, Danielle, is that it's about regional, and I think there is an element of really not every country is in the right place, when it comes to the strength of their currency, and there's an element of certain steps that can be there. But the one thing I actually have learned with participating in this year's initiative is that, interestingly enough, what blockchain technology projects have done in some countries is have actually leapfrogged those countries and those governments to understand the technology better in other countries that maybe are more traditional or maybe more, to have more built out banking sectors. And that means, for example, I mean, I take, for example, the Kiva protocol in Sierra Leone, allowing for administration to really deliver something that in a more developed country would actually take 3 or 4 years of all regulatory barriers to actually seep through. So it's not just the payment piece, but it's just the technology, the interoperability of it, and getting the administrations of countries where those pilots are happening, leapfrogging that knowledge and understanding the knowledge. I think that's really going to make a difference when it comes to utilizing stable coins or CBDCs, as the case may be in those countries.
I can't agree with you more. And I'll just say that I feel like what we need to be thinking about with all these different countries, because regulation is the thing that could actually harm the growth of this if regulation is done without really thinking through the whole infrastructure. But what we need to be thinking, and we need to be getting those governments and those folks to think, is by missing out on the blockchain opportunity, what are they not being able to bring to their constituents? Because that's the way to think about it. Not like what's the harm that's going to happen, but what's the opportunity that you're foregoing because you're not allowing it. So that's how we try to frame that argument a little bit.
Thank you.
And I'm just going to add one thing, because clearly going after Maya and Danelle is really tough. You guys covered so much. And instead of diving into CBDCs, I think the challenge that we're going to see is how do you balance a vigorously competitive wallet environment and a financial services environment that has same risks, same rules. And I think, Danelle, you just alluded to, is it possible for us to have this kind of global regulation? And we have, as you know, FATF put out some guidance, the FSB puts out some guidance, and you have great bodies that put out guidance. But we might not see a global understanding and a clear guidance moving forward. Therefore, at the local level, it'll be really interesting to see who accelerates quicker than others. And we're certainly seeing with 9 out of 10 central banks that are either researching, looking into a project. We have a couple central banks that already have pilots that are out there. So certainly it's here for us to say, but inherently, if you look at central banks, they operate with private sector banks. So they're non-market based. And if you look at the cost today, it's about 0.5% of GDP is what countries pay to manage physical cash. It's expensive to store money, it's expensive to destroy money, it's expensive to print money, it's expensive to transport money. And therefore, with stablecoin construct, and that's why this public-private partnership, I think, is so critical, and having these type of discussions are so critical, because blockchain is here to stay, digital currencies are here to stay. Even if we saw this meteoric rise over the past year, we still have options for the consumer, which was kind of the outset of my talk here. But certainly central banks have a role to play in this all ships rising moment.
Thank you, Julian. And I would go to the many other questions that we have in the chat, although I am wary of the time, and I think we have around 47 seconds left. But maybe Danelle, maybe you'd like to add one last part. Apparently 5 more minutes. So I think
5 minutes. Okay. Yeah, Shiraz, I'll take one purely because I think it's from Claudia Polimanti. And the question is about transferring funds and banked phones in areas. Well, listen, the necessity of a smartphone, and it says a smartphone, not a feature phone. Sorry, for those, maybe I've just realized that I have the question, but not everybody might have the question. So the question is how the panel see the implementation of using the money in environments without proper infrastructure. I mean, connection or business that allow digital payments like Peru, Argentina, and so forth. So what I would say to Claudia Polimante is that this is an area that the digital currency governance consortium has been looking at, and I think there's going to be 10 to 12 different papers issued later this summer. So keep an eye on the WF website. There'll be plenty to cover in this. But I mean, both Julian and I'm sure Danielle will have something to say about that. The reason why I wanted to pick up that question is because we've looked at both. I was lucky enough to listen in and hear about several initiatives. And not always, as we know, people have access to a smartphone. Sometimes the phones are just feature phones. And top of my head, I'm thinking of, for example, one of the Oxfam project in Vanuatu, where effectively NFC biodegradable, non-branded NFC cards were actually used, and the money was actually the money was actually backed. I think it was DI at the top of my head, if I think correctly, but at least the money was actually put on those cards, and it was just the merchants in the shops that really needed that phone. So people themselves do not need the phone. And in some cases, there are no Wi-Fi connections. There's a few countries, for example, in Africa, that there might be one smartphone or one feature phone for the family, and 4 or 5 different SIM cards, and people really just go back to actually use that SIM card. But if you're able to just have one app on the phone, that's probably just enough. And an example of that is the Valora app, again, and the project that I think they did in the Philippines. And pretty much they looked at, I think, a high percentage of the 100-odd people that they were part of the cohort did have feature phones, but maybe they only had 4 or 5 apps, and that was just enough for them to know how to download one and know how to use this one. So as long as there is some level of connection, I think that's needed. An interesting thing is pretty much mobile coverage is pretty much easier to get than it would ever be to get anything else. And I think that's where the technology of blockchain piggybacking of that is important. The point, though, is interoperability, not just having the phone. And I mean, I would totally not be the person talking at this. I'll leave Danielle and Julian to talk about that. But Claudia mentioned Peru, Argentina. The Interdevelopment Bank, I think the LAC chain effectively have such a project in place. It's pretty much a cross-border blockchain platform for those cross-border payments. It's just check it up online, and particularly they're looking at South America. So Claudia, I hope that gives you enough to answer that question.
And if I could just jump in and say, I'm going to put my Mozilla hat back on from years ago when I was there, because the focus here is, it's not just access to the blockchain infrastructure that we think is important, it's also access to Wi-Fi technologies. And so that's something that we also continually have to work on with governments in all of these regions to be able to spend the infrastructure money on creating these access points for everyone. So there's a lot of things we need to do, and that's one of them. And that also allows that this technology will even be more and more useful to folks.
And I guess I'll just add one thing now that I realized that there are all these questions in the chat. And I think you actually did a great job at answering 3 of the questions from one person. So I think our audience is thinking about the same thing, which is fantastic. The only one thing I'm going to add around interoperability is, imagine a world where I'm at a certain email domain and I try to send you just a basic email, and you're at a different domain, and it takes 3 to 5 business days. And I have to pay a fee for you to see my email, quicker. Currently, that's the way the traditional financial system operates, and nobody would stand by that. If I sent you an email and I had to pay for you to see it quicker. And if you look at transaction times and settlement times, when you go to your favorite local coffee shop, like I did this morning for 4 cups of coffee, thankfully I have free refills. But you go, and when I swipe my credit card or I use my smartphone, they wait 4 or 5 business days to actually have the funds in their account, where I'm a super happy consumer. It takes me 10, 15 seconds and I walk away. I think with innovation and with stable coins, the merchants can actually have their funds in 30 seconds instead of 4 or 5 business days. So I really think that the innovation is here. I really think that consumers want the optionality. And at the end of the day, the infrastructure, whether it is built or being built, I believe it was Danelle, you talked about leapfrogging some technologies. And if you go in Latin America, there was a question about how would Peru and Argentina kind of leverage some of the new innovation. Well, truth is, they leapfrog technologies. You go there and you don't see telephone poles and electrical poles, and they decided to just skip straight to satellite, which is fantastic. It is really a moment in time where we could leverage innovation to make a real dent in unbanked and underbanked.
Great, thank you, Julian. And I see Victoria has popped up, so I guess we are out of time, but I think we could have gone on for much longer. But thank you all for those amazing comments and having responded to most of the questions as well. So it was really wonderful. Thank you all for participating.